Well, welcome to the Monday call. Carrie, there's some more joining, I believe, so you can keep that and watch that. We're live streamed as well in eXp Workplace. So hello to you all. And if you're watching the replay, it's going to be a good one. I can't wait. So we'll get right to it, Nikki.
All right, awesome. Well, good morning, everyone. From a market standpoint, things are pretty just chill right now today as we head into this Monday. Rates improved a little bit over Friday, not anything significant where we're talking about rates dropping or anything from that standpoint. So things are pretty much remaining this way. I think what's happening is, and what we're being told is that until that Fed meeting happens in mid-March, we're really just not going to see any movement. We're going to be pretty well even until that happens. So that's a good thing in the idea that anyone who is kind of like waiting to lock in or wanting to see what happens, that, now it doesn't matter if you lock in today or a week from now, it's going to be pretty much the same. And then depending on how the Fed news comes out in mid-March, that's when we're going to start to see some movement on those interest rates. So not much to report from a market standpoint, but from an on the street standpoint, I got a couple of key points, couple of key things that have came up last week for me. The first one is mortgage insurance. We talk a lot to our clients about mortgage insurance, what it means and why they need it. So I'm sure everyone knows that unless, on a conventional loan, unless you're putting 20% down payment on your home, you are required to have mortgage insurance. So mortgage insurance is just a monthly insurance policy that protects you, the client, I should say, not you, the realtor, but you, the client, and the lender in instances of foreclosure. Basically, it means that if you have a property that does go into foreclosure and there's a balance on that property, you are not responsible for the balance of that property if you have mortgage insurance on the home. So it's required on all conventional lending. On FHA lending, it's required regardless of down payment, and it is on for the life of the loan. So the question that I get all the time is, can I get rid of my mortgage insurance? Well, the short answer is yes, you can. So you are not required to refinance in order to get rid of your mortgage insurance. That you are only required to do that if it is a current FHA loan and you are going into a conventional loan. You need to have 22% equity. So it's 20% equity upon purchase or 22% equity when you want to drop that policy off of your monthly payment. When I say equity, I mean appreciation. We can use appreciation and we can use principal pay down to reach that 22%. A lot of, as home prices and home values are going up, people that have previously purchased homes and are responsible for mortgage insurance are now being able to drop that mortgage insurance sooner. Also, ironically, the actual cost of mortgage insurance has gone down significantly in the past two to 3 years. It is not as expensive as it used to be, and there are some special programs that you can qualify for from an income standpoint that will lower that cost of that mortgage insurance even more. So not as expensive as it used to be. A lot of things that we can do to help you mitigate the cost of that mortgage insurance and put a plan in place and strategize to get rid of that mortgage insurance when the time is right. The other big topic that's probably going to come with a lot of questions, so we'll just kind of dive right into it, is appraisals. So appraisals, repairs on appraisals, low appraisals, what happens, who gets to decide? All of those things have been really hot topics as we head into the spring market, where there's a lag behind of homes that have sold versus what they're listed for as we head into the spring market. Couple of things to keep in mind. When you have an appraisal on a property, it is a 3-month look back of prior sales. So it is February right now. We're writing purchase agreements that are closing in March. The appraiser is going to be looking at properties and sales that have happened December and January and February. They are not going to be going back to spring market last year. They are not going to be giving adjustments because it's spring market this year. It has to do with what the prior homes have sold for. Keep in mind, if you're negotiating on seller paid closing costs, keep in mind your appraisal and what you truly think the value of that home is going to be, because that can affect whether or not you're allowed to give seller paid closing costs from your listing. Also, important to keep in mind, if there are repairs that need to be done to the property, please do those before the appraiser gets out there. We have a lot, the number one thing that I've seen this past week is there have been minor, tiny little repairs that could have been taken care of, that the sellers knew they had to take care of. They scheduled the appraisal anyway. The appraisal comes back subject to those repairs. We have to send an appraiser back out to that property to verify that those repairs have been completed. It costs the buyer an extra $150 to $200 for that appraiser to go right back out to the property. And it could have saved everyone a lot of time and heartache and everything from that standpoint if those repairs were made. So keep that stuff in mind. Also, as a listing, if there have been updates to the property since the property was purchased, please make a list of those updates and the relative cost and when they were complete. So how much it cost, what the update was, and when it was complete. This is going to help the appraiser out tremendously. They have to do a lot of upfront work, and usually their visit to the property is one of the last things that they do. But if you have a list of updates that have been made to that property, that makes their job a heck of a lot easier. That way, no one has to be out at the property. They can get the list of updates and they can adjust values based on those upgrades. And you'll just have a better, easier, faster result from that appraisal. So keep that stuff in mind, especially as we head into the spring market. We're going to get busy. We're going to get a bunch of appraisal requests. So it's going to take these appraisers longer to turn around these reports. So anything that you can do to help them, anything that you can do to encourage, the property and how it looks and how it presents is going to be super helpful as you move into the spring market. I just had an appraiser call out a hole in the siding of a property, and sellers didn't even know the hole was there. So now we're supposed to be closing on Friday, and I got the appraisal back and we have to make a quick repair before closing. So keep that stuff in mind. And if you do have any questions on what is a required repair, that really depends on the type of loan that we're doing and how much that repair is going to impact the value of the property. Also keep in mind, there are certain health and safety standards that are required for FHA and VA loans. Those health and safety standards are required above conventional financing, and they include things like handrails on all the stairs, making sure that the space between the spindles on the handrails is a certain width, GCI outlets in the kitchen and the bathrooms, things of that nature that are going to be above and beyond what would be required on a conventional appraisal. So I know there's a lot of information. People have a lot of questions about appraisals in general. My best piece of advice, contact me with any questions. I see hundreds and hundreds of appraisals a year, go through a lot of them, understand like what we're looking for, things of that. So make sure you reach out and ask the questions, because it's better to be prepared and have your sellers and your buyers prepared than it is for us to end up with an appraisal situation that we have to rush to get done before closing, or even worst case, have to push closing out because we can't get things repaired.
Yeah, and there is time for a few questions on this, because we might have people here live that have a question. Scott does. He says, on a property that went for over list and multiples, do you think it would be wise to up the list price on the MLS to match new offer price for the appraiser to see higher list price? Is that something you would suggest?
I would not suggest that, because the appraiser is not going to go in and check out the list price. They're going to know like things are selling in multiple offers. Okay. That's how it is. I would definitely have even if you do a list of upgrades, the other thing that I've seen some realtors do is they will take a list of the comps that they used to list the property, the price, and where they came up with their list price, so that the appraiser knows, hey, these are the comps that I used. And they can do that as a comparison. I'm not saying the appraiser will change that, but it's a useful tool for them, because sometimes they can say, okay, why did you pick this house versus this other one, and that type of thing. And you can, really have that option or those comparable sales there for the appraiser already, in case, just to make sure they didn't miss anything.
Yeah, I was going to say, that's something. Yeah, that's something that's still, done. I know that where I am now, that is actually done. We actually leave comps like on the counter for the appraiser. We can't have actual contact with them, but they oftentimes really appreciate it, because if they aren't used to that particular neighborhood, or, sometimes they're working a big geographical area. If these are comps that they don't have to search for, you're actually making their job easier. But you can, share what, why, and what, at least that gives a perspective. So good to know. That's a good strategy.
Yeah, absolutely. And keep in mind, there's plenty of appraisal waivers going around right now too. So an appraisal waiver, which means it's what we call a property inspection waiver. It basically means that we are not required to do an appraisal on the property for lending purposes if the client or the borrower meets certain requirements. Most of the time, those requirements center around a credit score above 740, a down payment of at least 20%, and a loan term of 30 years or less. So keep that stuff in mind. Those are conventional property inspection waivers that we can get, for those more prime clients. Now, despite what any lender says, despite what, everyone wants to talk about with these property inspection waivers, there is really no way for us to tell whether a property qualifies for a property inspection waiver until we get an accepted purchase agreement. We run our client, let's just say they have 800 credit and 20% down and their debt to income's 15% and they're purchasing a $400,000 property. It seems like we could get a property inspection waiver. Yeah, there's higher likelihood that we could, but it also depends on geographical region. The reason for that is those property inspection waivers are centered around algorithms and how many properties around that property have Fannie Mae mortgages on them, Freddie Mac mortgages on them, how much data, how much info we have on trends around surrounding that home in order to trigger for a property inspection waiver. More likely in highly densely populated areas, not as likely in the rural areas, obviously, because there just isn't as much data. And so keep that in mind. There is no way for us to tell whether or not we'll get a property inspection waiver. So it really can't be used as a negotiation tool when you're talking to listing agents about whether or not they should pick your buyer as the purchaser of the home.
Yeah. Good info.
Mm-hmm.
Good info. Any other questions anybody has on anything that Nikki has brought up? Aminata has a question.
Yeah, so the updates that is done on the listing, where do you include that for the appraisal? Is it gonna be on the description of the listing?
That's a
or
great
just
question.
leave it?
I usually just recommend you put it on a Word document or something that you can print out and leave on the counter for the appraiser.
Okay, thank you.
Yep. And just like you guys, we can't have contact with the appraisers at all. As a loan officer, we have a specific appraisal department that handles all of the appraisals, all of the requests, all of the communication with the appraisers. So it's one of those things where the more information that you can get in their hands, the better, because then they get to decide whether they're going to use it or not.
And Nikki, I would love, if there aren't any other questions with this exact subject. Do you see any in the chat, Carrie? Okay.
I do not. And there's a number of people watching live, but I don't see any questions. Anybody else before we move on?
Unless you have something else, Nikki.
Nope, that's it.
I would love for you, because you were a guest at our last in-person meeting. And remember, we talked about what was all about wire fraud. And one of our agents had a $50,000 wire fraud thing happen. So we walked through that whole process. We had someone on site that talked about the back end and how they deal with that and get it back. And it was a whole process. But what I learned, and I wanted you to share today, Nikki, was about us as real estate agents and what you have to do as a loan officer to protect ourselves from the liability with our phones and our computers. And I know that many people were just taken back and do not have these things in place. So I think it's really important to talk to the agents about that, because people are like, why don't I know about this? What is this? Like, whoa, jaws dropped. So I think I want to go through that.
Sure. So on my side, because I'm a lender and because I am, have access to personal financial information, my phone has a VPN on it, and so does my computer. So anything that I do on my phone has to be authenticated, has to be double authenticated, so that anytime I'm in contact with a client or have personal information that comes through my email or my phone, I know for a fact that I've done what I can to protect their personal information. Now that extends to any document that I receive, but it also extends to the client and dealing with wires and dealing with sending money that is traceable, but not necessarily protected. And what I mean by that is, in the lending world, in the lending space, when we verify assets from a client, in order for those assets to go to the closing table, we have to send the client instructions on how to do that. Most of the time, they can send that money to the title company, either by cashier's check or a straight wire of funds to the title company. Both of those are considered traceable sources of money. However, the wire, there's no insurance protection. There is absolutely no protection for those wire funds and where they're going. So if the client gets incorrect information, those funds could go to wherever they're going and they're gone. There's no way for the bank to get those funds back. There's no way for the client to get those funds back unless they find a responsible party, and that responsible party reimburses them for the wire fraud or the wire thing that had happened. So a lot of times what will happen is someone will get a hold of my email address or something similar to my email address. and they will email the client and demand that they wire funds immediately, and they'll give them fake wire instructions. Now, this has never happened to me, thank God, but this is what's happening out in the lending world and in the real estate world as well. They will get some sort of email address, whether it be, it'll look like Angie's email, it'll look like the title company's email, it'll look like my email, and they will send out an immediate need to have wire instructions. And the whole way that they did that is they got access to your email or your information because of some sort of phishing email or some sort of other fraud where they were able to have access to and see your emails or your communications with your client. So it's important, first and foremost, to make sure your phone is protected with VPN. I don't, make sure that you have some sort of anti, theft protection on there, some sort of authentication protection on there. It can be a bit of a hassle because you're constantly having to authorize usage, but it's definitely worth it. Now, with that being said, on our side, in order to protect our client from wire fraud, or as best we can, we are talking to the client very much so upfront on the phone or via text or whatever that is, and we are talking through the whole closing cost and wire process. Do not wire funds unless you've called me first. Make sure I'm on the phone to verify those numbers before you send any money. Because if someone were to ever get a hold of my email address and send the client fraudulent wire instructions, I want the client to call me and say, do I really need to wire this money? The other protection that I do is, getting to know my clients personally so that as we're talking, I know that I'm speaking to them and they're speaking to me. How's your dog doing? Oh, how's, Mark doing? What's new with, your trip that you took to Mexico, those types of things, to have those personal conversations so that as we're going through this loan process, I know for a fact that I'm talking to them and they know they're talking to me. Those are just things that the client doesn't necessarily realize, but that I do just as different protections to make sure that any information that gets sent or passed back and forth is true and correct information for the purposes of the loan. This wire fraud, it happens all the time. I always encourage people to go get cashier's checks instead, but wire fraud happens continuously. It is not something that just happens in big cities. It's not something that just happens in different states. It happens locally and it happens all the time. Most of the time, the borrower is out that money. There's nothing that they can do. Nobody is held really responsible. It just is what it is because, something's been hacked and these clients are getting taken advantage of. So it's just something to be aware of and make sure that, like, on my lending side, anytime I send wire instructions out to a client, it's call me. I just sent wire instructions. I want to verify you have the correct information. Don't send money before you call me. Don't send money before you call me. Those types of things, and make sure that we're talking to each other so that they know that they know that the information that they got is true and accurate, and they can send the wire to the correct place.
Yeah, and I think two other things I took away from that conversation. What was the timing on it? Usually it'll be towards the end of a business day. They're going to make it very, very urgent. Sometimes on Fridays. This one I think was a Wednesday that it happened. And so it's just having that conversation with your client if they are going to wire. I think I've had maybe one client and over 200 actually wire, and it could be because of this specific thing, and always cashier's checks. But be very, very, just heighten the awareness around it, make sure they understand, make it as severe as it is, because this client, the agent had went over and over and over with them, and they didn't see the email had changed, and it was just like one of those things where they're very good at what they do. They know how to craft it. They know how to time it. They're in the back end of these systems, either it's title, I think in this case, watching like to the dot, they had it to 2 cents of what they actually owed. So these people, these scam artists and these people are in the back end of these companies watching emails go back and forth so that they can create the email, they can insert themselves at a very specific time. So it does not seem weird. This does not happen out of the air. It's very, very calculated, and they know what they're doing. Hence, they can get $50,000, and I heard up to $200,000 because the clients, just no matter how much you told them, they felt in the moment they had to do it or the deal would be gone or something like that. So that would be the first thing. And then the second thing is us as agents, how can we protect ourselves or maybe set ourselves apart from other agents? I think the kind of the takeaway for me, and I don't know if you take this as mindset or not, but it could be a strategy for you as an agent to really set yourself apart from other agents, just being, guarantee I protect myself, I protect my clients. Maybe another question to ask an agent if you're out, interviewing agents for the listing or to be your buyer's agent, ask them, do they protect their phone, and to show you that they have VPN protection. Because I can tell you right now, my belief is 19 out of 20 don't.
Yeah, you're probably right.
And it's a big thing, and it's a big deal. And us as independent contractors, there's this whole thing about how we could potentially be liable if that happens through us. So it's not only protect your clients, but to protect yourself and your business and your independent contractor. So it was really quite interesting.
It was really interesting. And it was, us as a lender, we're more used to like protection and compliance and things of that nature. And so those things naturally happen for us in our positions, but it's a good idea for you to look into VPN options and protection options, because you just never know how your information is going to be out there. And it's all, what they say, it's all dark web stuff anyway. So even with the VPN, it could happen, but at least you've done what you can to protect yourself and your client.
Absolutely. Wonderful. Well, as promised, 12:22. So we'll keep it to about the 20-minute mark. Nikki, phone number, if anyone has any questions or follow-up.
Sure. 952-484-1584.
And you know where to find me. If you have any questions or coaching needs, I'm here and happy to help in any way. Let us know if you need anything in the meantime. Other than that, we'll see you next Monday, and thank you all for your time. Grateful you're here.